Dollar index last week yet again showed a very good swing here, lower highs, higher lows, phase of consolidation. Yes, it failed to break past 100.5 levels and specifically the last to last week's lows, and at the same time, yes, it is traded within the highs there for the consolidation zone. So now what to expect? Can we consider this as reversal and can we expect it to rise, or is it going to continue with the bearish momentum, give a breakdown on the downside? Which position you should take trading dollar index, we will see with the help of charts followed with indicators, and towards the end I will give you the trading levels and strategy for next week. So do watch till the end. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the daily targets on major global markets and commodities. Let's start. And also first let's have a look at the weekly charts. On the weekly charts, I told you, see the bottom there, rise, double bottom there, almost it has breached the previous lows also, and now it is trying to recover. Now recovery has to be there, and which means possibility of it to come back till towards 102, 103, 104 levels exist. In fact, it can try to fly in a little higher. And remember, 105.5 is a great wall. We had seen this. So this should be considered a reversal only and only if you see the dollar index trading above 102. Yes, if it stays above 102, we are going to look forward to another round of rise next week. Now see, this is coming after a series of red candles, a series of drops out here, and hence we have to be watchful. Now look at the daily chart. Most importantly on the daily chart, see here it was shown a reversal, or it is shown a symmetry, and then it has formed a flag. You can see this. See, first of all, this is the near term flag, and then this is the long term, not long term but the broader distance one. Now if you look at, it has given a breakout here, but then again closed the day within the channel here. But certainly a breakout is a breakout. For the near term, it was trading in this flag formation. It has given a breakout. This is a good sign. Yes, if it stays above 101.4, 101.5 levels, certainly you can expect that we are going to look forward to a rise here. First thing is, it has to break past 101.4, then 101.5 is the next target, and till 101.8 it has got major resistance. Remember, once it stays above 101.8 and 102, it is going to fly high. That should be a level beyond which you can expect that we are going to look forward to a very good rise for 103, 104, 105.5 levels. Now if you look at, yes, it has formed a flag, it has given a breakout, let it sustain. Now what it is trying to do, if it tries to achieve the highs, certainly you will find 102.3, 102.5 levels as the highs of this channel, which should be a good retracement levels. Now this is on the daily charts. Let's have a look at the weekly. On the weekly charts, I was expecting the last candle as a reversal candle coming at the backdrop of a strong series of drop, but again this week it has shown a candle of indecision and it has shown a good swing. So this is something also we have seen that it has formed a double bottom. There is a possibility of a rise. Now this possibility increases more if it stays above 102. Then yes, it is a confirmation that possibility of a little rise at least till towards 104 levels in the near future exist. When I say near future, that is mostly in the month of May itself exists. Possibility is there that it can try to reverse retrace a little before it looks over to a drop here. Yes, it is trading in this bearish channel and it has formed a bottom there. It can try to achieve the highs before looking forward to a lows. Yes, also remember, many a times I have iterated, many times I have told you, my target for the mid prices for DXY is little far below 98-95 zone. This may take a little time as it is trying to reverse right now, but yes, the targets remain the same, 98 to 95 zone. It may take a year or so, but yes, this will get achieved for sure. Right now, as you know, it is casting a doubt to me because see, it is trying to reverse here and it is happening at after a strong bearish trek. Now look at the monthly chart. On the monthly charts, couple of observations. See a bigger bearish candle, then the follow-up candle. The body size very small compared to the previous candle. Also lower lows achieved and then this pullback. Also the body size is at least half of the complete move. Now this signals that there is a possibility of a swing and a reversal in the month of May. It can try to give you a symmetrical candle from here, which may try to pull the prices up for next couple of months. So possibility exists that it can either give you higher lows, higher highs, or it can give you almost exactly symmetrical, or possibly a flat bottom greener candle. So yes, chances are there that mostly we might see the month of May as greener for the dollar index. The possibility exists, but then let's be watchful, because see, if you look at, see, this is the castle there. You can see this is the peak, and there is lot much more downside to cover, and that is why I say 98 to 95 levels will get achieved. Now see why I am saying so. Since 2010, the dollar index has traded in this bullish channel. Remember, this is very important point. And see, yes, achieving the high that retraces, then reversal, achieving the high that retraces, then reversal, and then possibly achieve the bottom. So this is what it is trying to replicate here. That is my expectation, and which will bring the bottom also a little bit closer rather than 95, possibly 96 or 98 levels. So yes, right now it is trying to retrace a little. Now let's have a look with the help of indicators. What are the indicators? Now indicators look at the moving averages are trading with divergence. Now it has started to converge. Just let it stay above 101.4, 101.5 levels. More bullishness is going to be prevailed. At the same time, below 101, I will recommend you to sell. And below 101, again 101.6, 101.5, it needs to break past by in order to confirm the bearishness. Stochastic has retraced a little, now again started to look down. The MACD on the other hand has crossed over in trading with little divergence, very little divergence. And see, this crossover happened after a long series of break here, long series of bearishness here. Hence a little recovery cannot be denied. RSI trying to look upwards and show a little strength. And if you look at the weekly chart, you can see the crossover here between the 20 and 50 period moving averages. This is a bearish sign. At the same time, it closed below the 20-50 100 weeks average. But yes, remember this fact, it is trading very near to the bottom of the Bollinger Bands. It can try to recover the prices till the median. There 100.3 levels, very, very good resistance. Stochastic was oversold, trying to recover here. MACD on the other hand is still bearish. It has not yet converged crossover. And see, you can see this, it has recovered the complete gains, or it has erased the complete gains here in MACD in just 1 year. The dollar index has achieved the bottom levels. Now this is for the second time it is showing a recovery here, so possibly wait for it to cross over. It can definitely bring a little rise. RSI very much at bottom, still trading bearish, and it appears double bottom on the RSI on the weekly charts. Now see this. So basically a little rise cannot be denied. On the monthly charts, all the moving averages are flat, trading with little divergence. It is trading below now the 20 months average. Remember, on the monthly charts, the super trend is still a buy and almost at sitting at around 101 levels. So 101 is a very, very good support, and it is closed the month above 101. That is also equally important. And if you look at the stochastic, there was extremely oversold, but it can stay overbought for months. It can stay oversold for months also. Why? Because see, look at MACD. The MACD has crossed over, trading with divergence, trading bearish. Remember one point, see, this crossover has happened at a slightly higher levels. Also, this crossover is trading with divergence. This is a bearish sign. It can stretch the drop for a little while, and hence in the near term also. This is why I say that my targets for near term are 98 to 95 levels. It may take a little time, yes, but it will come. So wait for 3 to 6 months, or in fact it can stretch the thing till 1 year, but yes, these levels will get achieved. RSI has retraced a little, trading at the top comfortable zone. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably. Remember, you should note out all these levels and take your positions at these levels only. Now, before we proceed, if you want to learn this art of trading profitably, you can join my mentorship batch. The 21st batch starts on 1st of May. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, let's have a look here. See where to buy. I will recommend you to buy here at 101.3 levels, and beyond that the possibility for it, first it needs to break past 101.5, then 101.8. If these two are taken, certainly very good resistance we have seen at these levels. If these two are taken, we are going to look at 102, and if it stays above 102, it is going to fly a high for 102.4, 103 levels, and this is going to happen at a very fast pace. So yes, once it stays above 102, 102.4, it is going to give it a very good rise, then directly 104, 105.5 in the few weeks we might see. This is applicable for the not only for next week but for the month of May. Just let it stay above 102.4, 103, more bullishness is going to prevail. On the downside, where to sell? I will recommend you to sell at 100.9 levels. Yes, if it stays below 100.9, the next target is 100.55, 100.1, and then see, we already know that these levels have provided it a maximum support and a very strong support here, and hence only and only if it breaks below this, you can confirm that we are going to look at sub 100 levels, which is going to take it for 99.8 and below levels also. Remember the fact, it has to stay short, it has to stay bearish below 100.55 levels. You can expect more drop there, you can expect further drop there, you can expect that it can continue to stay below 100 levels if it stays below 100.55 levels. So note out these levels. Below that further bearishness is going to prevail, which I don't think so. These are double bottom levels and I don't think so it is going to break this level. There is a possibility of a recovery, there is a possibility of a bullishness, there is a possibility that it can continue to rise from here. Take your trades accordingly, trade with a stop loss, trade with a trailing stop loss. On the upside, be cautious for here 102.4, 103 levels. Take your trades accordingly. And yes, do not forget to like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.